Herb, they're smarter than we think. We like the stock. We like the stock.
I can argue, I don't even know if there are foreign powers at work here behind the scenes trying to make chaos of our markets.
What's going on, everybody? My name is Matthew. I hope you enjoyed that intro, but despite the theatrics, I actually have a relatively deep video for you here today. In this video, I'll be talking about my thoughts on GameStop, the infinite squeeze, and the different ways you can look at this situation. And at the end, I'll also talk about some long-term opportunities that are being opened up by all of the craziness happening right now, because the main focus of this channel is, after all, long-term investing. So I always try and take an objective view when it comes to investing, and I still do, but in the case of GameStop, I think it is so unique that it definitely warrants a closer look at the emotional angle and perspective. From what I've observed and experienced, there seem to be two ends of the spectrum in terms of perspectives on this situation. On one end, some believe everyone will get burned, this infinite squeeze is very unhealthy for the financial system, and everything going on could bleed into the overall market, leading to losses for everyone, not just Wall Street, ranging from a correction to something much worse than a correction. And then there are those taking a stand, trying to send a message through the stock market to Wall Street, and using GameStop primarily to send that message. And for many of these people, it is not about the money. So the goal of this video is to bring those two sides hopefully together, or at least shed light on the different perspectives so people can have a better whole picture. I'll use myself and my reflections as an example of how my thoughts have developed since writing this community post right here, where I mainly focused on more of the risks and financial repercussions of what's going on and less about the emotional side. But since then, I've tried really hard to understand the emotional angle as well, and hopefully my thoughts are now developed enough to where I can come forward and share them with you. The two main perspectives that I kind of see are, one, what I call the investor-trader perspective, which is more financial and objective in its nature, and then two, the human perspective, which is more personal and emotional. Before we begin, I hope everyone is watching with an open mind, because I'll probably say some things that people don't want to hear or would disagree with, so I would love the conversation to also continue respectfully down below in the comments. I'm still learning a lot about the market, and opinions are always changing, but let's just get right into the first perspective, the investor-trader perspective. I realized that when talking about GME to my community posts and my Discord, I was coming at it from the perspective of someone who was solely concerned about the P&L, profit loss. How much are you going to walk away with at the end of the day after getting involved with GME? And that's simply because that's what I'd usually do with any investment that I talk about on this channel. But obviously, GME is much more than an investment or a way to make money for a lot of people. And you could make the argument that no matter what it is, at the end of the day, everything in the market is driven by fear and greed. However, I'm not so sure that holds up with GME, because we've never seen anything like GameStop before. To understand this initial reaction of mine, I think it helps to understand that the mission of this channel is to hopefully help people reach financial independence and make and keep money in the markets through long-term investing. So when GME finally really popped up on my radar, I know it's been building up for a long time, but by the time it really stood out to me, it was already at like $100, $150 per share. And accompanying some very solid theses from Wall Street Bets were a lot of other ones that were maybe more shaky or just had enough knowledge to be dangerous and more speculation. So my gut reaction was to say, whoa, maybe warn people and say this could end poorly financially over the long run. And a lot of people started hopping on. There was a lot of misinformation and echo chambers, and emotion seemed to be controlling the conversation a lot. And as a long-term investor who's pretty much trained to treat emotion as the enemy of being able to make money in the stock market, I felt like I almost had to be that bearer of bad news and say, hey, if they don't restrict our trading and our brokerages, then the financial system could actually be at risk due to factors like market mechanics, liquidity issues, clearing houses, margin calls, etc. And if the financial system as a whole starts to hurt, then nobody wins. But at the time, I felt like if I had come out and said that, no one would have actually listened, and I just would have gotten a lot of emotional responses. So instead of doing that, I realized, okay, I'm obviously missing something here on the emotional side. What am I missing? So that's why it took me a while to get this video out, because I think I finally understand more of the whole picture. So I put a link in the description below to a video from another YouTuber who explains why brokerages had to put restrictions on trading to protect what is, albeit a broken financial system. And it's a tad patronizing in the video, but I think he does a great job explaining it, so therefore I believe it's worth a watch. And to be clear, there are some very shady parties when it comes to different brokerages. You know, Robinhood doesn't look that great, seeing as a lot of their order flow is through Citadel. But I'm speaking more about general terms why other brokerages also had to restrict trading. But anyways, let's move on to the next point. The other concern of mine, again from an objective financial perspective, was brought up by Aswath Damodaran, a professor from NYU, while on a podcast called The Prof G Show. He said what's sustaining the GME infinite squeeze right now is momentum. Of course, there's the number of shares outstanding versus the number of shares that need to be covered and all of that, but a lot of this is based on momentum. Now, retail has done an incredible job of diamond handing those shares, and respect to Wall Street Bets for being able to hold from $4 till now. But another concern of mine that I had that I think was kind of confirmed by listening through this podcast is that it's not just retailers propelling this momentum. There are, of course, almost certainly funds that are currently long on GME with us. Obviously, retail does not own 100% of GME's float, so even if we all hold, there will probably be a fund that eventually sells, because these funds don't have emotions, they're not driven by emotion, and they're driven by greed. What happens when GME may lose momentum, whether that's through manipulation or not? What happens if GME continues to be manipulated and momentum slows, and it no longer makes sense for the fund to be long GME, their trade is done, they close it out, they'll be selling to the shorts. Then what if these funds go on the other side of the trade and try and bring it down against us? What I'm trying to say is that yes, diamond hands will prevent many shares from being able to be sold to the shorts so they can cover, and that will keep driving the price upwards. However, I don't think retail owns everything. Tesla, for example, has been able to sustain their price after the squeeze, and there's still a lot of shorts in that one, but they've been able to sustain it because they have underlying business fundamentals. I think most people will agree that Tesla is the most disruptive company we've seen in a very long time. In other words, Tesla has the fundamentals to back up their share price whether or not it's overvalued today. Eventually, it can probably grow into its valuation. But with GameStop, can it sustain not only momentum, but also support market cap with fundamental reasoning after the momentum is gone? Yes, they have an incredible new CEO and they have a strong new business strategy, and their stock price has been artificially pushed down by shorts for the last few years, so we don't actually know the company's true value because of that manipulation. With all that being said, is this really going to make them worth over $20 billion today or ever? So to wrap up this perspective before we get into my more developed thoughts and to explain my initial reaction, I was worried that emotion might kind of cloud financial judgment, and I wanted to try and help protect the downside by bringing in facts and information that didn't seem to be circulated as heavily. At the time, I also saw people putting a lot of money into this, and I kind of had the impression that a lot of people were putting a lot of their portfolio into this position. Eventually, I realized a lot of people were not doing that. They were being more cautious and putting a small amount of their money in to kind of support the cause and the movement. I actually did this as well. I bought about 8 shares at roughly $109 per share. But to other GME holders, I really want to try and understand, what is your end game? I'm trying to think about this from every way, and this is kind of the last piece of the puzzle for me, and it's something I would love for you guys to comment down below what you think the end game is for Wall Street Bets and with this whole GME saga. Retail has put Melvin Capital on life support, and we've probably knocked out a few other funds that we haven't even heard about. I understand why you'd want to hold GME, I understand the sentiment, but is there a tangible kind of finish line or achievement that it hopes to be accomplished through holding GME? Yes, the market is broken and we deserve a market that's not broken. By holding GME from $2 to now, Wall Street Bets has exposed Wall Street and forced them to manipulate the market and show everyone kind of their true colors. But is the end game a new financial system? And if so, are we prepared to handle the fallout of a complete financial overhaul if that were the case? Listen, any system that allows a fund to short more shares than there are outstanding is broken, and the greedy people who made that happen deserve to lose billions. What they did was unacceptable. They wanted to basically manipulate a business into going under, reduce their ability to gain capital, and force people to lose their jobs, make a business go under for their own personal gain. You may not want to hear this, and trust me, I don't either, but I think the unfortunate and ugly truth is that Wall Street sees manipulation, trading restrictions, forcing the sales of shares, which is absolutely messed up, blatant media and market manipulation, and paying settlements. They see that as being cheaper and easier than actually doing an overhaul of the financial system. And that is messed up. It is their fault that we're even in this mess, that they allowed these things to happen. It's not the retail traders' fault for pointing it out and calling them out on it. But I say this now because I think looking at it from strictly a financial perspective, the market will probably enforce even more manipulation, enforce some new regulation from the SEC so that stocks can't be shorted this heavily in the future to prevent another situation like this. And things will likely be messy for a while before they eventually return back to what was normal. So I know you probably don't like the fact that I'm saying this, but the reason I say it is because I fear that if people are not prepared or they don't expect more manipulation to come, which it probably will, and again, it's messed up, but that could lead to emotion clouding financial prudence, in that it starts with maybe 1 or 2 shares and then they do something else that's even more messed up than closing trading, and then you say, you know what, I'm all in, and then that's kind of a way of saying I'm going to fight back, but that's very risky. I own the shares, I support the sentiment, but I also want to be as real as I can with all of you and say that I think there has to be a balance of the emotion and the objectivity, especially when hard-earned money is at stake. I wouldn't feel comfortable having this platform and then not presenting these risks that may be hard to hear. I think the best way to think about it is using your shares as almost like a donation to a cause that you really believe in. Expect them maybe not to go to 0, but probably back to maybe $20 or $30. They could easily go to 1,000 or 2,000, who knows? But eventually, I believe it will come back down to reality. So that explains the investor trader perspective. It explains why my gut reaction was to warn rather than to run and join the fight. I was afraid to share that I even had a position in GME, and I was like, why is that? Well, being in this position, if other people see that I own GME shares, they could use that as a green light to allow themselves to also buy GME shares and expose themselves to the risks. And the thing is, if someone buys something because I bought it, which you should really never do, you should always do your own research, but if that happens, I don't get to see the motivation behind why they did so. Because I think there's a range. There's really no way to put a blanket statement on this. There are those who hold GME simply for social, moral, and personal justification and reasons, and to those people, the money could not matter less. Then there are those who, if they're very honest with themselves, know that they might be using this moral and social justification as a way to make an excuse for them to enter a trade that they know is very risky, to chase the quick buck and the get rich quick idea. And I think that was what I was afraid I would encourage if I posted a video saying I was holding GME, because that is simply gambling. But now, after learning more about the emotional side, I know it runs a lot deeper than that for a lot of people. Then there are those who are literally just in this to profit and make a trade, and to you I say good luck. That would scare the heck out of me. I hope it's your full-time job and you have a very comprehensive understanding of market mechanics so you can see things coming like the brokerage restrictions. And then there's everyone else. I don't want a generation to get burned and then be discouraged to be in the market again. This has already happened many times before. And that could happen if people lose more money than they are willing to lose. That's rule number 1 of investing. Never lose money. And rule number 2 is don't forget rule number 1. And bear with me here, but to visualize my concern, if you have $10,000 and you get a 20% return on that every year for 43 years, 20% by the way is incredible, you'll end with over $24 million. But even if you just have 11 straight years of perfect investing, and years 12, 24, and 36, you lose 50%. Your 43rd year's return has now dropped by over 90%. Also, not all shorts are bad. It is bad when it's a fund as greedy as Melvin, but shorts can actually play a crucial role in our markets. To name a few, 1, they help uncover fraud. Enron, thanks to shorts. 2, they can help stocks in the stock market find bottoms. If a stock craters, maybe on bad earnings or bad news, the shorts in that position will cover their shares and start to buy the stock back and help form a bottom and prevent things from just spiraling out of control. And 3, on the opposite end of that spectrum, they can help keep euphoria in check. If a stock goes way up, way too optimistic on some news or some event, then shorts are the ones who kind of say like, hey guys, Let's calm down a little bit. Let's be reasonable here. So there's definitely a reason to have shorts, but some of them are just bad apples, like very bad apples. All right, thank you for bearing with me. Now for the human perspective, the more emotional side of things. And to the investor and trader people who are watching this, I encourage you to listen to this part because nothing like this has happened before, so I think it requires a new lens. In our history, when has investing in a stock like GME or the others been a way of sending a message to Wall Street, a way of sending a message and expressing oneself? I am pretty confident this has never happened before, at least not to this scale. Now, is this the kind of thing that should be brought into the financial system and potentially pose systemic risks to the way it is built? I don't know, and only time will tell. But until then, please hear this. This movement dates back to 13 years ago, and for some, many more years before that. Let me paint a picture. In 2008, CDOs and the subprime mortgage crisis, that was a broken system driven and created by greed. Much like how greed drove a company to have 130% short interest because the system wasn't paying attention and the system was broken. It does not make sense why there are not regulations against this. And when everything came crashing down in 08, some banks went under, but many were bailed out, and the retail investor were left holding the bag and financially distressed, financially ruined. Cut to John. And I do want to say maybe a trigger warning because I'm going to be talking about some stories that I've heard from the 2008 financial crisis. So if any of that kind of stirs up emotions, just maybe skip ahead a little bit. John sees his parents depressed and struggling to get by for much of the rest of their lives because of the fallout from 2008, which they're still trying to recover from even many years later. And looking back, Wall Street got a free pass. This isn't retail just suddenly realizing that Wall Street is flawed. This is deep-seated. And again, a trigger warning here, but if you go on Wall Street Bets, there are stories of people describing losing family members because of the financial stress. A patron of mine actually shared that his family and his parents were ruined after they had immigrated to America to try and start a better life. And the astonishing irony here is something that you can't even make up. It's that while growing up and watching his parents struggle, teenager John was actually probably the target demographic for a little retailer called GameStop. Of all the stocks an infinite squeeze could occur on, of all the companies that Melvin Capital and others had to get greedy on, it was GameStop. Probably one of the most nostalgic companies for the generation that had to rebuild themselves and their families after the 2008 crisis. So to be able to stick it to Wall Street 13 years later, using none other than GameStop as a means to do so, and as a way to expose the system that is broken yet again, I can understand how that is priceless. And this time around, I would argue that the retail trader is more empowered than ever, having spent the last year indoors with plenty of time to study stocks, and with the power of social media to make information instantaneous and ubiquitous, and with the stimulus lining their portfolios. You can see why institutions might be afraid. And you might see the stimulus as a joke, but think about it this way. Say GME is at $300 a share, you get a $600 stimulus check in your checking account. That's enough to buy 2 shares. Multiply $600 by 7.1 million Wall Street Bets members, that's $4.26 billion in capital. And I guarantee you there are members who are willing to sacrifice more than $600. But again, don't do anything you can't lose, please. And I won't even get into how social media has likely changed investing forever. So to my investor and trader perspective people, I think this is really important to understand. Again, is this the kind of thing that should be brought into the financial markets? I'm not really sure. But at the risk of beating a dead horse, I think it is clearly wrong to blame the retail investor for being involved with GameStop or potentially putting things at risk, because the only reason we're in this mess, the only reason things are at risk is because the system was broken in the first place. Previously, people would say, oh, I'm buying a speculative position, but only with money I'm willing to lose. And we all know that's not really true most of the time. But this time when they say money they're willing to lose, I actually believe that. Again, please be careful. But when things are this emotional and something I didn't realize quite as much before, I think it's harder for me to be in a place to give that not financial advice, if you know what I'm saying. I'm putting my 2 cents out there. It's risky, but I understand it. To revisit the ugly truth, I think Wall Street will continue to manipulate and shape the market so that they are able to get out of this situation. They'll probably pull some moves that the average investor would not see coming, such as the brokerage restrictions. However, the average retailer is able to learn a lot faster and a lot more, again, with the help of social media today. GameStop, in my opinion, is also a one-time event. I think it's going to be really hard to be able to replicate anything like this, especially now after all that's happened. But I'm in this. I am going to diamond hand these things until they go to zero, but I am not in this for the gains. I am not in this for the profit. And if you are, I think there are better risk-reward opportunities elsewhere. Speaking of which, let's talk about the long-term opportunities that have opened up due to all of this craziness. I felt like I had to make this message and video at some point. It just took me a long time to articulate what I'm trying to say and feel, but I also don't want to distract us nor this channel from the other opportunities and the other things that are happening all around us. This is what I've been saying to my Discord, my Instagram for the past week or so. This is an amazing spectacle. It's really incredible to see. but don't get too distracted and keep your eyes open for other long-term opportunities being opened up right now. And for the sake of the length of this video, I'll keep this brief. Opportunity number one, I've been buying more crypto, specifically Bitcoin and Ethereum. And yes, I am proud to say that I did buy before Elon put it in his Twitter bio, which I am still terrified that that is now perceived as almost like a buy signal. It seems to be the decentralized system is the next best option if we really do intend to start some sort of new financial system. Hopefully that is able to prevent the sort of manipulation we're seeing today. Will that happen? I don't really know yet. There's a lot of things that could happen with governments trying to step in and of course manipulate things again. But I still think we're in the early stages here and I want some more exposure to it, so I have about 3% of my portfolio now in cryptocurrency. Long-term opportunity number two is actually more functional and practical than actually an investing opportunity. This one's more about opportunity cost. Get a new broker. If I were you, I'd probably get my money the heck out of Robinhood. Despite them saying it's not a liquidity issue, the CEO's brutal interview and the fact that they're now restricting over 50 stocks does not give me any confidence that that's true. I suspect their cash reserves are dangerously low. They've tapped out all of their credit lines, and if Robinhood does go under, I believe you are insured, but at the same time, if that happens, they'll probably freeze your account and your money will be in there for a very long time. Personally, I have the most of my money in Charles Schwab. I have my Roth and Fidelity, and I have a little bit of trading money in TD Ameritrade. Another good one is Interactive Brokers. In that same vein, the long-term opportunity number three is investing in stocks like SoFi or IPOE and Square, SQ. The Robinhood exodus, as they are calling it, will probably send a lot more users to different brokerages like the big ones I just mentioned and other ones like SoFi and Square's Cash App. We've already seen this effect a little bit with IPOE's price action, but an unanticipated jump in user growth could unlock a lot more potential for both of these companies. And as a disclaimer, I do own Square stock. Finally, long-term op number four. This one's a bit more broad and general, but I think it's just as important. Make sure you are paying attention to your favorite companies right now and not just the Wall Street bet stocks, because the overall market is starting to see a bit of a correction. We technically haven't hit that 10% retracement yet to call it a correction, but I think fear is starting to creep in a little bit into the market as we see a lot more speculation. Funds obviously probably understand and recognize the systemic risk that a GME infinite squeeze could cause to the overall financial system. And you also have fund managers who are probably terrified because they're now being outperformed by the likes of Jake Paul. Additionally, you have funds selling great long-term stocks to help raise capital to cover their short positions. You also have other retailers selling these really good names to get into these other targeted Wall Street bet stocks. It's so exciting to watch this all unfold, but beware of tunnel vision. Keep your focus on the entire market as a whole, and you can see everything unfold and find opportunities where other people may not be looking. So I hope this video serves as a comprehensive guide as to my thoughts for this overall situation. I probably won't be mentioning it again on the channel just because I want to refocus on the long-term investing. After all, that's why you watch this channel. I actually think I may have found my gaming play. If you've been following for a while, you'll know I've been on the hunt for a gaming stock. Make sure to subscribe if you want to hear what I'm talking about there. I hope this video helps. And power to the players, baby. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.